I'm Peter Cowan, Managing Director, Sutton Capital Partners. Welcome to the fourth of our series on the mindset of an investor today. We're very fortunate to have Ben Narasin, a venture partner with NEA, and Ben is one of the true pioneers of e-commerce. NEA is one of the largest and well-regarded venture capital firms on earth, with a global perspective, having invested over $20 billion, enjoying over 500 liquidity events. They understand scale and macro issues as well as anybody. Ben has made some early stage investments as an angel and a VC in companies like Lending Club, Cabbage, Dropcam, Zenefits. He's also been a successful entrepreneur, founding one of the earliest e-commerce companies, fashionmall.com in 1993 that went public in 99. Things around us seem to only get more turbulent. And you may hear some honking behind me because I'm at a corner where people are putting up signs and others are honking in trying to support some of the recent issues that have gone on. So if that happens, I may mute for a moment, but just know it's part of a live and dynamic environment here. I hope all of you are doing safe and doing all right. I do see a light at the end of the tunnel, and I hope you do too. We're going to talk to Ben for about 30 minutes and then have about 10 minutes of questions and answers. Please send your questions through the Q&A tab on the toolbar on the bottom of your page. We'll try to answer as many as we can. Ben, welcome. Thanks for being with us. How are you?
Hey, thanks for having me. I'm as well as can be expected in the current climate.
Yeah. Well, we're excited to have you. You know, you spoke at our recurring revenue conference. I thought it was one of the best discussions you had. We're eager to have you back. We know that you'll speak candidly, clearly, and because so many of our audience are entrepreneurs that are raising or interested in raising capital, you give some very candid, clear advice, and we're going to talk about that. So, you know, we've known each other about 15 years, but before you get into the investor mindset, tell us something people may not know about you.
Okay. I was a professional freelance food and wine writer for about a decade. I did that in parallel to my career as an institutional seed investor. I, by the way, was an institutional seed investor. I was never an angel. I was an angel for one deal. I hated the process, but I institutionalized it and felt better. So I wrote for everybody from, I did adversarial work for the Wall Street Journal. I wrote for the San Francisco Chronicle, Wine Enthusiast, a bunch of great magazines, almost always for print. I wanted to have something to put in my library. And since I've had to spend a lot of time organizing my library, I'm coming across those a lot more now.
No kidding. Well, you still doing it?
No, the time just hasn't allowed. I did write I was a paid contributor for TechCrunch for a while, and I've written for some online versions of things like Barron's about more entrepreneurship and investing. But I have not written an article in a good solid year or two. The time just has not been available. Maybe it will be again now that, of course, all time is available since we're working from home and have 24 hours to work.
Yes, these are different times. Well, listen, we've been in lockdown now effectively 3 months. Your typical day 3 months ago was a novelty. What's changed? What's going on today? And what's changed in your behavior and in your views in the last 3 months?
Well, I guess the biggest change is, you know, NEA, I'm very proud of the fact that we were very early to start to encourage people to sort of work from home if they wanted, and then change travel habits. I was just on a board meeting with a group in London, and it reminded me that back in March, we had already cut off all international travel for the most part, which was way ahead of when a lot of other people did. At the time, I wanted to protest it. I chose not to, and I'm glad I didn't. I would have been on the wrong side of history. I think the biggest change, obviously things like I'm not traveling anymore, although I do bike to the office, where there are a few days a week when I'm here, because San Mateo County considers investors, interestingly, to be essential services. So I read the rules very carefully, and apparently I qualify. And I can go 5 to 10 miles from home, and this happens to be in that range. But the main thing is I just don't have as many meetings. My life before, my goal in life was simple. I get up, I have a meeting, and I have meetings all day long until the day ends and I go home. And now I have meetings, but less of them, and they're all on Zoom. And one of the questions I have in my own mind is, you know, we have seriously considered and looked at multiple companies and can do investments via Zoom. But for my own personal effort, you know, I am so anchored on the human, I'm not sure if I can get where I need to get, particularly on the early stage stuff, without spending time with them. So just as recently as a couple of days ago, I was lobbying for, hey, if it's legitimate for me to go to the grocery store and stand 6 feet from somebody with a mask on, isn't it legitimate for me to take a walking meeting where I stand 6 feet from somebody and have a mask on? Because I do feel the need for that connection to understand the people I invest in.
Well, I'm glad you brought that up because, we see dozens of investors, dozens of deals, and we're starting to see a sentiment along that line that it's one thing to invest in somebody that you've known before and now they come with something new. Or if you're a fund, you come and two guys say, listen, this guy walks on water, or this team or these people walk on water. They're great. We should go do this. The idea of doing a walking meeting and the idea of actually meeting in person seems critical to a lot of people. Are you starting to do that? Are you starting to have an invite? Obviously, if somebody's not in town, that makes it harder. But do you think this is going to start to happen? Is this the next stage? What are your thoughts?
I think it'll be the next stage. We're not there yet. First of all, I actually don't think, I'm a very strict rule follower. I don't know why, but it's just part of me. As an entrepreneur, I was willing to bend every rule to the utter limit, but I didn't want to break it. And what I've seen, so as an example, over the Memorial Day holidays, my wife said, oh, we should have some people over. I'm like, well, let me go read the rules. Well, the rules are no, you can't have people over. You cannot have people over to your house to sit 6 feet from you and have a cocktail. So until those rules change, I think we're going to continue to adhere to them. But I do think they are starting to loosen up. They just released new guidelines yesterday. The governor of California has now put it in the hands of the individual counties. So I think it's coming pretty soon, but it'll be case by case. One, it'll be firm by firm, and two, it'll be person by person. Like as an example, everybody here works from home. We have one or two, up to a maximum of 4 people in an office that can hold 85 right now. Often 0. 0 is the norm. Sometimes I show up, sometimes a second person shows up, and very rarely it's more than that. And we're on the 4 distant corners. But when we change that, it will be totally optional. No one will be asked to come back. They will be given the choice. Because I think a real part of this is the comfort and safety of your team. And as we, like many firms, focused on our team first. Then we focus on our entrepreneurs. And then you get to sort of thinking about other things.
All right, so you're, and I think that's relevant because the first thing is to look internally, and obviously you've got a great group of partners, and you work closely together, and there's chemistry, and there's a change of rules, and then you want to look obviously at your portfolio companies. Give us a little discussion of what you'd advise entrepreneurs now to do if, in fact, they are looking to raise money this year. It's the next few months or the next 6 months or a year. What do you suggest? How should they go about this? What's changed?
So it depends a lot on stage. Firstly, the first thing we did, as far back as late March, early April, was start spending very active time. I mean, every board member spends active time with their entrepreneurs, but sometimes that's once a quarter. We went to more like once a week. And, now it's getting to more like once a month. And we sort of lesson one or thought process one, everything is ultimately the decision of the entrepreneur. We can be a source of hopefully wisdom and guidance, but ultimately the entrepreneur is the one that decides whether to take that or not. It's their company to run, et cetera, except for in extreme instances, which I've never had to experience in my lifetime. So, the number one thing was, hey, are we in a position where we have or can get to a place where we've got 2 years of runway? And I would encourage entrepreneurs, and by the way, if you're just thinking about this now, you're pretty late in the curve, but I assume that almost all the entrepreneurs on the phone are already doing whatever they had to do and already have done whatever they had to do to get to the safest possible place they can to first survive and then stabilize and then grow and then prosper. Obviously, there are outlier companies that are growing in this environment. But, so number one, do you have enough capital to get through a time period like that? So then number two, thinking about your question of what if they need to or want to raise? Well, it's a very different time to raise. Everybody's open for business. And entrepreneurs and investors are both out there doing in some form or another. So investors raise capital. We had closed on a $3.7 billion fund, just a little bit shy of when everything started to change. So we, like many others, have dry powder. And we did need to spend the majority of our time focused on our portfolio for quite a while. And in fairness, we will still spend the majority of our time focused on our portfolio. But you do start to look, and you look at two things. One, you look at things that you were excited about that you might have missed out on. All right, so those are more mature companies. So when I talk about it's more about stage. As an example, in our own portfolio, we have a company called Masterclass that is thriving right now, and they were able to raise a very large round with people that had never physically met them. Now, I'd say two things about that. One, it's a later stage company, so you've got metrics to be able to look at. Two, they did a lot of meetings via Zoom. And three, they got references in from people that knew them quite well. You know, it's always been the case that a warm introduction is better than just over the transom. But now, since there's a decent chance people won't be able to meet you for a while, it's really important to have as much of an endorsement as you can from somebody that knows you, that also knows that person, if you can get it. I know that's not always possible. You know, you also should probably think about this. You know, when I talk to entrepreneurs, one of the encouragements I make is think of it more as the start of a relationship and building that relationship, but being a lot less likely to do something near term. I mean, there's outlier instances, but you know, it's, if you don't need the money right now, you know, I used to, when I was an entrepreneur myself, I used to always live by the golden rule, ABC, always be closing. And what I came to realize, because our product was very expensive, is that doesn't work for telesales. Not for an expensive product. I would try to close somebody on the first call. And I finally I got an executive sales coach to coach our organization.
Yeah.
And I learned pretty quickly, the only thing you can achieve in the first call, physical call, I'm talking about the days of the phone, is to get a first meeting. And that totally changed my dynamic. I went from, I'm trying to sell you, to, I just want to get that meeting. And sometimes those calls were 10 minutes instead of an hour, which was fine because it got me to the first meeting. You know what the only purpose of a first meeting is for an expensive product? To get the second meeting. Mm-hmm. And money is an expensive product. When you need $5 million, $10 million, I would argue that in most cases that's an expensive product. Think of this as a path that you're going to travel that's going to go step by step. And getting that Zoom could lead to that walking meeting, could lead to something else. And some people will embrace doing things remotely. I would argue that doing things remotely entirely is likely easiest for very early or very late. Very early, because if you're doing pre-seed or seed, you're taking a level of risk that's quite different than Series A or B, and you might be able to justify that over 3 or 4 Zoom meetings with somebody. And later stage is more metrics driven, and so you can get to that data. And yes, you want to know what this leader is all about, but hopefully you can get a read on that. So keep trying, but understand it's going to take longer. Rule number 1: it's going to take longer.
Right, and I think this is something that is the new normal, or what to do as far as relationships where you're not seeing people in person. As you say, you're asking for a big check. You're not going to be closing on the first meeting when you talk to an investor and everything. So my question is, let's assume that most of the people here have either they're going to raise their seed, they're going to raise their A, some of them are earlier stage, or they've raised an A and they have to, raise more money, and let's say it's not shooting through the roof, and we can have that discussion. And so their goal is to come in and start to build relationships, start to know people like you. Are there things that have been effective and not? And do you have more time or less time, or is there fatigue in this? What tactics work, and what's your mindset for having calls with people you have not met before?
Interestingly enough, I've started to, in a lot of cases, prefer actual calls. Zoom is pretty fatiguing. As an example, I biked to the office today, and I did a 2-hour board meeting, followed by a 1-hour presentation, followed by a 1-hour presentation, followed by, one of the people on one of my sessions was like, well, I know I've never worn glasses in the past, but all these Zooms are on my eyes. So where it isn't going to need a Zoom, and obviously if you need to share a slide deck, that needs a Zoom. I sort of like calls. Calls are better. But how do you get that connection? Look, I read all my emails, and I've got my Twitter here at Narasin because I read my DMs. I read them all. Now, I try to respond to many, but I say many, not all. I am going to read the note. It doesn't mean I'm going to respond to it. So I try to be as open as I can to letting people have access to me. I just don't want there to be any confusion. They're like, I don't have an EA read my emails. I've always thought of email as sort of the sacred thing that it's my responsibility to go through. I try to treat Twitter the same way. So you can get to me, The biggest advice I'd give you now is the same advice I've always given. Be concise and tell me the elevator pitch. The longer the note, the less likely it'll get read. When I go to my own entrepreneurs and they want an introduction to somebody, I say, okay, great. Here's what I want. I want a headline that fits in the subject that tells them what you do. Because if I'm introducing you, there's a 99.7% chance they're going to read the email. They're going to read the header 100% of the time. They're going to read the first line 99.7% of the time. They're going to read the second line 90% of the time. The third, 80. Like, people don't read. Make your point. If you want to add support, great. But investors, there are different types of investors. And so I'm definitely speaking to my style. I want phenomenal people with big visions, great ideas. It usually breaks down, it's more likely to break down on the idea, because there's a lot of great people out there doing interesting things. But if the idea can't get big enough, so if you said to me, I almost can't use these examples anymore, because so somebody will say, well, I did that. And then I'll say, oh, I'm really sorry I insulted your company. But if you said, I'm making a new kind of coaster to hold your drinks because a lot more people are at home, and I'm going to sell it online for $2 a 10 pack, and I'm going to make it out of cork at a 40% gross margin. Great. More power to you, man. I don't see a venture scale business there. But you could now go on to give me an encyclopedia of information on your business. It's not going to change my view that cork coasters are not a venture scale business. So, I want to know what you're doing first and foremost. And I always, look, I'll tell you a trick I use all the time. I put the entire message in the subject line.
Yep.
I say, XYZ, best Ben. You open it, it's empty. Every once out of 100 times, someone will respond and say, hey, the message wasn't in there. I'm like, yeah, it was the subject line. So, I try to keep it concise, and I would encourage people to do the same. Sessions like this.
As a result, what I'm hearing out of this is same sort of conciseness, different sort of medium, and a chance that some people are open to you meeting them if they pass a certain set of criteria, and you think others might be open to this as well. Be precise, get through. Obviously, far better to have a referral virtually always, and that in a certain way people might have more time. Do you think you're more open now to seeing something new than you were when the crisis started, or not?
Not really, but I've always been one of the I'll take any meeting open people. The reason I'm slightly less is sometimes there'd be something borderline, but I'd say, okay, well, let's have a meeting. And my EA would say, why don't you just do a call? And I'm like, you know what? Calls are worthless. I'm never going to learn anything about this person on a call. Let me sit down with them and see if there's something magical in the human. So because I can't get that right now, I will admit the bar has gone way up. Like, I have to be really excited about what you're telling me, because I'm not going to learn as much about you as I want to. So my bar has gone up in that way. So I both have more time available and less in other ways, because while we have, perhaps some of us have less external meetings, we have a lot more internal meetings. There's another thing that I think is specific to me. I'm not speaking of the firm. We're in a truly unprecedented time. And part of me says, you know what? Great companies are created in every environment, in every era. That's very true. I've built companies. I started a company on Black Monday. 22.5 points down on the 22.5% down on the Dow. I've lived through multiple crises and built companies out of them that did quite well. And I believe that will be true now, but I wouldn't mind 1 or 2 quarters to just see what's happening in the world. It's like, as an example, companies that are getting a COVID bump, as people will call it, how much of that will stick? Don't know. Want to understand a little bit more. What I do see is there are no more laggards left. Everybody is using technology. If you resisted technology in the past, well, now you finally embraced it. So you're seeing technology adoption just growing at a tremendous rate. One company told us they did as many new signups in 8 weeks as they've done in the prior 8 years. It's pretty stunning. But it's just, there's so much uncertainty. It makes it a little harder. If someone's I saw a business, I won't name the category, but there's a bunch of categories. I haven't seen any businesses in travel lately, but let's say there's a super exciting opportunity in travel, and yet I just fundamentally don't understand what the travel experience will be like and how long that will last. So how can I make a decision? I used to say to entrepreneurs, look, if I don't know what I don't know, if I know what I don't know, I can diligence it. If I don't know what I don't know, pretty big deal for me to try to decide that I do. I would argue that's a dumb move. And there's a lot of things I don't know right now, and I know about them, but there's probably plenty more that I don't know.
So let's go down that road, because I think that you've made some bets on some early companies that have worked out. NEA is known for making bets and following them all the way through from seed, and you can see all the things, whether it was Uber, Robinhood, all these other ones that have come up. What categories? What excites you? We can grasp that travel's an unknown for you and all this. You obviously came from a world of e-commerce. You were one of the first online shopping malls. There's no secret today that online shopping has been accelerated, right? Shopify says that it took 10 years to go from 5 to 15% of sales, and 8 weeks to go from 15 to 24% of all sales to go online. What's your view of online commerce, and anything related to that?
Yeah, that's an interesting category. I mean, even though I was one of the pioneers, starting a company in '93 in e-commerce, a little ahead of most, it's a category I've never invested in for multiple reasons. One of them, by the way, is that I think all of us have the same, well, many of us have the same failing. Whatever we have done and understand extremely well is harder to invest in because we know how hard and how painful it can be. Someone once said to me, ignorance is a powerful thing. Right? Not knowing how hard something is allows you to try it. Entrepreneurs often succeed out of the ignorance of knowing that something's impossible, which is great. I mean, I've done that multiple times. Not knowing something can't be done. I'm not an old fuddy-duddy. It's just that, man, was it hard. And so I have been thinking a lot more about e-commerce lately. We were at like 10.8% of the US economy's commerce was online last year, and obviously that's skyrocketing. There are a lot of challenges with it that I do think still exist, so I'd want to see a very distinct approach. I'd want to find something different. My pithy little saying is always, I want to find entrepreneurs that make me say, wow. I'm not as much a thesis investor as I am an investor in entrepreneurs, the individual human beings. And I want people that come to me with ideas that I either never had thought of, or they think of it a different way, or maybe I thought of a lot. One of my theses about what life after COVID might look like, which is counter to the growth of e-commerce, is that we may actually be finally at a point where there's a dilution of or end of consumerism. You've been home everybody on this call, assumedly, has been home for 2 months. What did you not get to buy that you need? And actually, what do you need? You need food, you need clothes, you need shelter. You got it, right? Assumedly, everybody on this call has all that. Are you missing out on something? Do you start to realize that, hey, maybe that random garbage that I bought, I don't even need it all? I talked to somebody that had fled New York and gone to Virginia, and I said, how did that work out for you? She said, what's great? All I really need are these sweatpants. It's like, okay, well, there you go. I stopped buying things a long time ago, but I wonder if people start to back away from the discretionary spending on things that are not going to last. Every time you donate another 10 boxes of stuff to charity, you think, wow, did that ever have to come into the world in the first place? So, does that engender more of a sharing economy? Well, maybe, but then people are scared about touching other people's stuff, so I don't know. But I think there are going to be a lot of interesting models. What I generally view as my place to seek is the green fields. Not that I wouldn't invest in e-commerce, but I'd want a greenfield approach, something that's different. Okay. I don't want the next version of X. It's not like, well, we're doing Shopify, but only for nurseries that sell plants, which I don't know, it seems like it would be a good lifestyle business at least. There's a lot of nurseries and how they do what they do now. I didn't get to plant my tomatoes for Mother's Day in the same way that I usually do for my wife this year. So open-minded to it. Obviously work from home is here to stay. A lot of companies, big and small, have realized the productivity is high. Why would they make people come back? I have no idea how that impacts real estate. When people come back, they've got to be spaced out. But then again, do they need to come back? I just talked to a major corporation that owns 7 buildings. And by the end of this, they expect to own 2.
Yep.
Your people are working, and this is not a startup. I mean, this is an old school org that is finding productivity in their people. So measuring the productivity of people is going to be important. There's going to be a flattening of the labor pool in some ways. I think we'll have a meritocracy. I think we'll have more than ever before a true meritocracy across the workforce, and that creates investment opportunities. If you're an engineer, if you're a coder, and you are scoring 98 out of 100 on all your code, I'm oversimplifying it obviously to make the point. Do I care where you are? I don't care anything about you. You could be a synthetic organism as far as I'm concerned if that's where you are on the stack, and that's a function I need. There are other functions, including functions within engineering and coding, where that won't be the case and you'll want physical connectivity. But it's going to be an interesting time to see. I go back to no more laggards, everybody's online, and we can measure that.
So the meritocracy could be a major theme, and the idea that where somebody went to college or where they're located or what their background isn't as important as something that could objectively quantify their skill level and something that's relevant, and some sort of training that could be done that doesn't even need to be physically there, that could open up the workforce to be broader, more global, all different types of people, and there's not a prejudice or an expectation of who they are or who they're not.
Yeah, I've always believed it doesn't matter where you came from. I think one of the great secrets to entrepreneurial success is tenacity and drive. And, there's great data out there. You're basically better off hiring one of the top 5 or 10 students at a tiny little university you've never heard of than hiring somebody in the, bottom half of an Ivy or bottom quartile of an Ivy, right? Like, yes, you have to be smart. You have to be driven to get there. But did you keep going? Did you achieve? And so, I'm always trying to find some symptom of that tenacity and that drive in the people I invest in. Being an entrepreneur is the hardest non-life-threatening job that I'm aware of. I have an enormous amount of respect for the people that put their lives in harm's risk, whether that's people taking care of patients right now, or firefighters, or war fighters, or any of this. But absolutely, I'm not in any way diminishing that as an incredibly hard, dangerous, and wonderful passion for someone to have and something to give back to this world. A desk job, a job where you sit at a desk or on a Zoom, there is nothing harder than being an entrepreneur. It is a lonely, tireless, just eternal journey where 15 years in, you might become an overnight success. Failure is always an option. It's just around the corner. You always have self-doubt. You don't have anybody to talk to. On and on and on. Like, it's just, like, I lived that life for 25 years and I loved it. It's who I am. But it's hard. And if you don't have the tenacity to make it through that, a lot of people think they want to be entrepreneurs. A buddy of mine said, yeah, there's a lot of wantrepreneurs out there. And he's right. The more media and social and everything else that sort of spreads the gospel of how great it is, and even TechCrunch, where I wrote for a long time, you see that and you see all the good, amazing stuff of the sub 1% of entrepreneurs that make it to the glory land. Yeah. But there's a lot that don't, and there's a lot of pain along the way. So you really need that tenacity. And I don't think that tenacity comes from the fact that you went to school X, Y, Z, or you look like anything. I've been saying more commonly now, I've always said this, but one day I want to fund a purple octopus from another planet that's sentient to just show everybody it doesn't matter. Look at how compelling this purple sentient octopus is, because none of it matters. Nothing matters except your intelligence and drive. You need both. I will certainly acknowledge tenacity without the sort of smarts to get it done isn't going to work, but you need both. And the smart and tenacious can come from anywhere and everywhere.
So my question is, can you share with us an example of somebody whose tenacity impressed you, that you bet on, that already hadn't been remarkably successful? What was an example of tenacity that captured you? Because you're looking at it as a critical criteria once you've got, obviously, a reasonable amount of intelligence, which is all around us.
Well, there was a company that we funded as a firm that I'm really impressed with and I've always loved, which is Play Versus. Delane, his story is having sort of come out of the projects in an environment where the peer group of people that were successful were drug dealers, and sort of being an entrepreneur from a young age, spun up a cell phone store. And, I'm envisioning him sort of selling cell phones one at a time to start and growing it from that. And he's gone to grow a really fascinating business that allows, high schoolers to do esports for competitive credit to letter. And, I found him to be a just truly compelling person, and just with a really phenomenal story. I have in my own history funded more than one elite military veteran where, there's the difficulty of getting to be a SEAL or getting to be a Ranger is as much mental as it is anything else. And on its own, like I would look, you can show me you're smart because you went to great school, but if you want to prove to me you've got what it takes to survive and prosper, you show me that you ended up as a Navy SEAL. De facto, I get that. Now let's go into all the other things I need to believe in. There was a kid out of England who, he started a business with his high school buddy. He was so young. I'm not sure he went past high school, super bright, ended up with a huge exit. I'm like 70x return on a just shy of $1 billion outcome. But, he had made his way over here on his own at a young age. Like, you hear their life stories, and their life stories tell you a lot. One of my own partners and I were talking, we had a group yesterday, we were talking about some of the things that are, it's an emotionally troubling time right now, and it's good to have people to lean on. And one of them grew up on an Indian reservation, and his father represented the tribe. And, it was really fascinating to hear his stories of the challenges faced in that community. And, but it also told me a story of him that I had not really thought about as much. So you constantly look for little symbols. Now, I will tell you this, it's sometimes hard to find them, but sometimes you do. I mean, sometimes I've not uncovered enough and then found out that later somebody was willing to give up. I still remember the first time I ever lost money on a deal. I was 3 years into my career as an institutional seed investor. I had funded this company and they decided to shut down, or they sold for 2 cents on the dollar, something like that. And I went home and I was very unhappy. I was sad for the entrepreneur, and I was just bummed out. It had taken me 3 years to lose money in a deal, which I was sort of surprised by too. I was thinking, is that good? Am I not taking enough risk? Whole different story. Anyway, I go home and I'm all moping around, and my wife's like, what's wrong? I said, well, I just had my first failure in a company I invested in. She's like, tell me the story. Well, they've been working on it really hard. It's been a year. And she looked at me, she's like, a year? Like, you're right. A year. He gave up after only a year. And I had this visceral reaction. I mean, when I started Fashionable.com in 93, I started with my money. I spent all my money, 100% of my money. I raised $100,000 of outside capital and ran that business bootstrapped until 99 when I took it public. 6 years. We were an inch away from not making payroll. A lot less than an inch away from not making payroll on at least one occasion, right? 6 years to get to any form of capital. And I started to think, wow, why am I feeling bad for him? I should feel bad for me. Like, what mistake did I make that I invested in somebody that gave up that quickly? I don't want to sound like a jerk here, but it's like, this is really hard. A year is nothing. That entrepreneur I mentioned that came over from the UK. I always say to my entrepreneurs, look, it's a 7 to 10 year journey from here to liquidity. And that was in the old days. Now it's probably more like a 10 to 15 year journey, maybe 10 to 12. And so after about 5 or 6 or 7 years, he and I were having our quarterly sit down, and he said, it's really hard right now, Ben. I'm like, why? He said, well, it's been 6 years. And I was like, yeah, I know. He's like, well, I know you told me it would be that long, but I didn't believe you. And he was at a challenging time, and he said, do you think I should sell? I said, look, if you sell now, you'll get paid. Someone will buy it for $100 million, $200 million. It was a good business. It was a heavy revenue business. It was in a sector that wasn't enjoyed by many people. Recent IPOs have not done well. So why is this so challenging? He said, well, it's really my wife. She's done. I said, okay, well, your issue is not you. It is you. I mean, it's challenging for you because making sure your spouse is part of your business in a way that's supportive is really important. My advice to you would be the following. The answer to whether you should sell is what conversation you have at home. If this is not something your spouse can support, then you need to honor that and think about how you can get around that. Does that mean you need to change yourself out? Does that mean you need to sell the business? So he went home and he basically had a conversation along the lines of, look, my point of view was, it's been 5 years. It's probably going to be another 5. But if I can stick it out for another 5, it's going to be glorious if I get it right. And he went home and he had that conversation, and his spouse was supportive of him. And that allowed him to go forward. That company that I thought would sell for between $100 and $200 million sold for just shy of $1 billion about 3.5 years later. So I happen.
Of course, on the other hand, there are other discussions where it could blow up, or the marriage breaks up, and those are all part of the experiences. That there's no shortage of people that have inner turmoil at home. That's part of the trade-off of being an entrepreneur, right?
It's a huge part of it. Look, I could not have been the entrepreneur I was without the support of my wife. And replace wife with spouse, significant other, whatever you want to do. Yeah. It is incredible. These are very, I'll go back to very hard journeys, and they tax your family as well. And my conversation with him was, you can go forward if you have that support. If you don't, I had a really I always remember this. In school, I had this phenomenal professor, Bill Bygraves, who was an entrepreneur. And he was teaching entrepreneurial studies at Babson, and he said, there was a time, and you will probably get there, where, the tension between your business and your family will be unbearable. And, he said something to me I always remember. He said, if I was asked to choose, I don't know which I would have chosen. Just a really like
poignant example. So Ben, I'm going to take this moment because I find that the stories you tell are engaging and gives a visceral aspect of what you look for in an entrepreneur. And I'm glad you were able to exemplify what that grit is. So we have a few questions here, and one of them has to do with the current environment today from the audience here on seed investing. And so the question is, everything we're seeing is some of the larger rounds and some of the great companies. You mentioned Masterclass, they can go out and raise more money, and they've got the metrics, they've got the momentum. There's easy to see a vision. Everything we're seeing is seed investing is harder for a host of reasons. What's your advice to people who want to launch a business and need capital today and haven't raised that first round or need to raise money from new people they haven't met?
Well, it's interesting. I just had a conversation with one of my founders yesterday who's seeking a seed round, one of my personal portfolio companies. And he said right now, actually, the seed investors, these are his words, have become more aggressive. People with capital need to deploy it. And I think in some ways it's easier to do a remote meeting and make a decision after a couple of them as a seed investor because the risk reward is quite different. And often you're betting on a person with a great idea and an as yet unproven product. In fairness, there's seed and there's pre-seed and there's whatever comes before that. So, if you want to raise that $1 million, which I used to call seed, but now I guess it's just pre-seed, you can probably get a lot more flexibility out of the people on the other side. I think the more money you have to raise, the more important it becomes to have that deeper connectivity in. But it feels like, and it's one data point, but it's a data point from yesterday, that the seed investors are open for business and they're getting more aggressive at looking for things. This is the perfect time for seed investors to be acting. Look, my best returns came from 2008, the last horrible financial period. My 2008 and 2009 investments, and include some 2007, that was Lending Club, that was Cabbage, that was Dropcam. Those were great companies with great outcomes. Or at least Cabbage is still ongoing, and I think we'll have a great outcome. It's a phenomenal company. Dropcam sold and Lending Club went public. Those are examples, and they were also priced rationally, so rationally for the time. Everybody complains about price, but if they look, prices almost always only go up. Interestingly, right now, I'm not seeing people being particularly, at least not in traditional tier one venture, messing with people on prices. People aren't being pushy on terms. I mean, they're being rational, but you haven't seen some great buying opportunity, some contraction. It is a bit of a tale of two cities, and this will probably be true in seed as much as everywhere else. And those two cities are the ones that are going to be able to raise quickly because everything's wow for whatever reason, and the ones that it's going to take a much longer time to get there. But that's been true in venture for a long, long time. I think it's just exacerbated now by the conditions.
So I'm curious. I mean, look, the NASDAQ today is up again, just within a couple of points of its all-time high. That certainly seems like some validation. On the other hand, what we're seeing in the market are the seed investment companies are coming in at lower valuations in many cases, or not open for business, even though they say they're open. Is this something that you're seeing at NEA or other places that people are writing more seed checks? Certainly, it's not what we're seeing at the moment.
Yeah, and in fairness, I'm anchoring on this one data point from yesterday, but I haven't seen behavior in either direction. I'm not seeing a significant uptick or downtick in seed. It looks like the overall numbers, when we do our reviews every week of deals that happen out in the community, it does feel like there's less deals getting done. I assume that comes back. But look, I go back to one of the very first points I made on this call. It's going to take longer. There will always be those superstars that even before they have proof are going to do well. The Leonardo da Vinci's of their time.
Yes, of course. So another question we have is, with things changing and becoming things more virtual, less in person, do you think this is an opportunity in the AR, VR space?
Maybe. I spent a couple of years looking at AR a while back. I got really excited. The problem I see there, and we're an investor in a phenomenal company, it used to be called Mojo Vision. It's now called Tectus, which is an AR contact lens, which I'm super excited about. I even got the rare privilege of being able to put a little bit of money into that one myself. I'm just head over heels about what an exciting opportunity it is to have AR on the contact lens instead of on these big guys. But the challenge as I see it is all around form factor and user base. So I think there's a lot of great things that can happen with AR. Retraining is an example of that. Remote maintenance is an example of that. But you need an installed base of equipment on the other side. So, it's probably going to get interesting again. But you still need a form factor that works and enough people that have bought it or will put it in place to have it make sense. Google Glass was one of the early folks out there, and obviously there was some interesting challenges there. But on the industrial side, it was a valuable asset. But it did create a pretty high cost of install. So if you had the perfect, elevator maintenance app, but it only worked on Google Glass, and I don't have Google Glass, well, I'm in for a lot more money than just buying your app. So I think there could be some really interesting opportunities there. It feels like we're not as much betwixt and between as we were before, but we still probably have some wood to chop when it comes to getting enough devices out there. Now, having said that, you can do AR on a phone. I mean, Pokemon Go proved that. So think about things that are device neutral. I could get really excited about something that was really compelling and served a huge market and was device neutral, where it worked really well on an iPhone or an iPad in an AR environment, but it would work even better on an immersive device. That could be quite intriguing.
Great. Yeah. All right. We have time for one last question. A year from now, you and I are meeting or discussing, and it's June 2021. What's the same and what's different in this new normal? Are people meeting? Is transactions happening? Is there pain in the marketplace?
Yeah, there's a lot of dependencies for that. I assume that summer will be reasonable because the nature of these sort of viruses seems to be less effective outside and less effective in the summer in terms of the virus being effective versus the people. I assume the fall and moving into winter will be far worse. That's been the history if you look at sort of things like H1N1. So if we're in next year leading into summer and we just came out of a horrific fall winter, well, do we have a vaccine yet? Because if we do, then people probably are much more comfortable. And if we don't, then I think people are still reasonably scared. And all of those things dictate what you have when it comes to sort of person-to-person meetings and how people interact.
Ben, this is great. Appreciate your insights. Always like to have you, to hear your thinking and your process. I'm glad you could share it with the group here, because I think that's a real important view into how a professional venture capitalist evaluates opportunities, the macro perspective, how you look. And we've always appreciated your thoughts and your advice to entrepreneurs as you go into the details. And I think you provided some tactics for people and a way to understand that this environment's different, and some thoughts on how to be able to perhaps put the best foot forward and when it's appropriate to talk. So I appreciate that. Please join us next Wednesday, 10 a.m. Pacific time, for an engaging discussion with Minnie Ingersoll, who's a partner at 10110 Ventures, a co-founder of Shift Technologies, and a former principal and product manager at Google. As you know, we're going to continue to put on these presentations, and we hope to put on our recurring revenue conference next year in next April. And so we'll keep you apprised of that. We welcome all feedback and look forward to seeing you again. There's a recording with Ben that will be sent to you. And if anybody has any other questions, please follow up. Thank you, everybody. Thanks, Ben.
Thank you. And DM me if you need me.